Take what?
We're a little behind schedule. Go ahead and fill your 60 minutes.
Okay.
We'll be a couple minutes late to lunch, and that's okay.
All right.
All right, thank you.
That's my age, 60 minutes. Okay, am I on? Can you hear? Yes, no, maybe?
Yeah.
I don't know, is it working?
Yes.
Okay.
It's not real well.
All right. So I'll, you got the,
Yes.
okay, so I'll start the timer so I don't run over. Hey, we got an enrolled agent there. He knows about taxes too, boy. I'm worried. He's gonna correct me. We got another enrolled agent right there. Two of them. Good. So I'm gonna go ahead. Good. Okay, so what we're doing today is talking tax, that exciting subject that nobody likes to pay, but they like to have it done right so they pay less tax. And I've been doing tax since 1976, so I got a few returns under my belt and a few audits. I'm also a CPA and attorney. I'm also registered to represent taxpayers before the U.S. Tax Court. And we do income tax, not so much simple ones. I get really god-awful complicated ones that I have to peel apart and take it apart and put them back together. But Schedule C's starting out as a fairly straightforward form. It's for self-employed, so there's the tech guy right there. Hi. So what we're going to cover is the Schedule C. It's part of the Schedule 1040 individual tax return, and the state uses it also from the federal format. We're going to cover this overview. We're going to be covering who must use the form, what kind of stuff you have to put on the Schedule C, and that's a technical term stuff. We'll define it better later. What's the taxable income, what's not, what can you deduct to make your tax bill low? This is a free enterprise system in action with you being in charge. We're going to cover how to dissect various kinds of business expenses, vehicles, depreciation, business operating expense, home office, allocation of business and personal, and how to keep out of trouble from the IRS and the California Franchise Tax Board. If you have any questions as I go through, you're welcome to holler out. And if I know the answer, I'll answer it. Otherwise, I'm going to ask one of those guys. Okay, before you start your Schedule C, there's something you got to do. It's a prerequisite. You got to do your books. You can't have a box full of stuff in your house with all your bank statements and your receipts. It doesn't work. What I suggest that you do is, I use QuickBooks Desktop. I can't understand the online version. I've been using QuickBooks Desktop since it was Quicken, and then they split it off a long time ago. So you enter your expenses every month when you do your bank reconciliation. That's a good time to put all your expenses in. And one little trick that you do with QuickBooks is you have your regular bank account. So you have a check register and things. Open up a new bank account called Cash. That'll make your life a lot simpler. This bank account, Cash, you paid for stuff out of your pocket. You post it to the Cash bank account. It's an imaginary bank account. And then the balance is going to be below zero, because you started with zero. So just put another number in there, call it contributed capital, make it zero. Does that make sense? So you have one bank account you're always dealing with, you're doing a bank reconciliation. Everybody has cash expenses. It's not part of the bank. How are you going to get it in your books? If you don't put it in the bank, it won't balance. So you open another bank account called cash expenses. Treat it like a bank account, just post numbers in when you come back with the receipts. It starts at a zero balance and it keeps going negative, don't worry about it. Whatever it's negative, just post it as a deposit to zero it out and call it contributed capital. And it's true, you contributed capital when you went out and paid for something for cash, isn't that right, Jim? Yeah. He didn't say it. So, you keep your books up. Don't get too carried away with QuickBooks. You can go into way too much detail, or you can just use the check register. But accounting's fun anyway, right? I suppose. Yeah. So, this is the Schedule C. We're gonna break it down into parts and pieces and go line by line. I've got some extra worksheets. And we'll come back to the various parts. Quite frankly, I learned a bit putting this program together. And this is page 1 of the Schedule C. You've got income, who you are, account numbers, then there's expenses by categories, home office. Page 2 will cover cost of goods sold, and then expenses by categories in the back that are totaled and brought forward. So self-employment comes with a lot of perks. It just means you're gonna have to file a Schedule C if you have over $400 of self-employment income during a year. You know you gotta file one when you get a 1099 NEC, non-employee compensation. So the form seems simple at first, but there's 48 lines. You don't need all the lines, and we'll cover out how to dissect the numbers. We just call it Schedule C. The full name is Profit or Loss from Business or Sole Proprietorship. Name does exactly what it says. It calculates business profit and loss, and then we can go to tax computation. Another type of separate legal business entity that uses the Schedule C is a single member LLC. So that had filed with the Secretary of State. They call it a disregarded entity, which means if you have one, you got rental property, you do your rental stuff on normal Schedule E. If you have an LLC running a business with only one member, then this is an appropriate place to put the income and expense.
You put it on the Schedule C for the business?
Yes.
For the LLC?
Yes. Single member LLC.
Right.
Right. What it is for federal, they don't want a separate tax return. And I'll show you, California wants lots of papers, so they get a separate tax return. But a single member LLC disappears on your Schedule C. We'll get into it more detail.
Okay.
We were told in an earlier session that because we provide personal services that we're not supposed to have an LLC.
You know, that's true. But I'm telling you how the form works, not just for LDAs. I agree. You know, Rod Danstein used to have an LLC. I don't know, it got off his letterhead somehow. Now it says Inc. You're correct. But maybe you have a side business. Maybe you're also a mobile notary.
Yes.
Wow.
Real estate.
Yeah, or real estate, so. I don't assume that everybody just has one business. I've got 4 businesses.
That's why it's better to have, you can do the LLC and then turn it into Inc.
Yeah.
Incorporated, yeah.
Yes. That's called the entity classification on Form 8332. but that's beyond what we're talking about today.
Okay.
So can you do both on one, like if you're a notary and an LDA? Can you do both of those on one, or would they be two separate? And do you have
Okay, the
separate?
question is, if you have two separate business, LDA and a notary, can you put it all here? The answer is yes. Any kind of self-employment income that you have as a self-employed person would go here. Yeah, so even if you had some other business like, did Uber driving or something too, it would go on as self-employed. Yes, ma'am?
Do you do each, different one, different schedule Cs?
No, you can if you like a lot of unnecessary work, yeah.
Oh, but you
It
don't have
is
to.
possible, but you don't have to. If you were doing a big deal and you had one that was a whole lot of money and one was a big loss, the IRS might want you to split it out. But for most small businesses, keep life simple and just report the income that you get on one Schedule C. So, sole proprietorships also include, when you have a fictitious business name. Go ahead.
I'm sorry, so if I understood correctly, if I have an LLC for my real estate and I have LDA and sole proprietorship, I can include it in the Schedule C.
In your case, in your example, I would not include them.
Okay, so I have to have separate.
Yes,
Okay.
that's the way I would do it, because they're significantly dissimilar and they run on a dissimilar license.
Okay, thank you.
Yeah, because there's also other things with real estate, whether you're a real estate professional for rentals, and you don't want to mix all that stuff up. Okay. So, we said something about disregarded entity for a single member LLC. If you were a single member LLC and you elected to be a corporation, you're not using this form. You're using an 1120.
Right.
It doesn't land here, or if you elected to be an LLC taxed as an S corp, you do 1120S. It's no longer disregarded. And when they say disregarded entity, it's just that IRS doesn't want to see your paperwork. Just they throw it in on a Schedule C and they're fine. But California's a party pooper. They want you to file a separate form every year. A Form 568. Even single member LLCs have to file this. It's a form to see if the FTB can kick off other kind of taxes. And they also want to make sure they get their their $800 a year out of you to be on their mailing list when you form an LLC. I've got a corp, and I paid over $34,000 in $800 a year payments. So I don't recommend an LLC unless you really have some liability reason, and insurance works well also. Okay, so there's a term you'll see, it's called single member LLC in the code. Things they'll call it SM LLC. And the Schedule C is a simple form. I mean, it's straightforward. Everybody can kind of use it. Self-help. If somebody has a lot of stuff going on and I don't want him to get audited, I said maybe you don't want to use a Schedule C. Because if you take a Schedule C, IRS can have any trainee auditor come and audit you. They don't have to have, they went through the 8-week class. They know where the top of the form is, and they can send them out to audit you. But if you have, like, sometimes what I'll do is I'll have husband and wife in a business, LLC, and I'll say, oh, that's not a single member LLC. I want to file a Form 568, or, 565. And the reason is your chance of audit goes down a third. because IRS can't get any trainee to audit an S corp or a multi-member LLC. So if audit is an issue or problem, you might want to vacate the Schedule C. And with this LLC, you get your $800 a year tax. Plus, when your sales go over $250,000 for the year, you have to pay another 1.2% on your gross. Even if you didn't make any money. They take the 800 and they add more to it. I had one company, they were paying, instead of 800, they were paying 11,000 a year based on their sales. Well, this is nuts. I closed down their LLC, I put them in an S corp. In the S corp, they pay $800 a year flat. So it saved them $10,000 a year. Okay, so we're on the top of the Schedule C. Oh, did we pass out some extra materials?
No, I didn't get any.
You know, you were supposed to print it off Calda's website, but I went ahead and got about 3 that I printed out from my computer. Who else would like a copy of the material?
Thank you.
You have them on your computer. What about you, Jim? Oh. All right, we'll let you.
Thank you.
Jim's my good buddy from Nevada. We get together and insult everybody and solve all the world's
Like
problems.
one of those guys from Nevada, man.
Yeah. Okay, so on the top of the form, you put your social security number. If you don't have one and you're illegal alien, then you need to apply for an I-10. And you can either see an acceptance agent, or you fill out the form, I believe it's W-7, and you send your IDs to IRS, and then it comes back with an individual taxpayer ID. It's not supposed to be used for work in the United States. So what do you do with it? You put it on your Schedule C, you put it on your W-2. That's just what you do, or most people. Your principal business or profession. This helps the IRS know whether they look at your expenses and it seems reasonable or not, based on what kind of work you're doing. Then the next thing on the top of the Schedule C, they want to know your business code. And it's a lookup feature. It's called a NAICS 6-digit code. So what the government wants to do is do statistical analysis based on different types of businesses. So you go to census.gov.NAICS, and then you start looking for what kind of business you have, and you pick a number. There's no downside if you make a mistake. Yes?
What if you can't find the type of business that you're working with? What do you do?
Yeah, we have a code in tax and accounting that I learned in accounting school. It's called SWAG. And that stands for some wild ass guess. Some wild ass guess.
Okay, so what's the code?
You just pick one. It's no fault. It's no fault. If you get it wrong, there's no penalty. If you get it right, you don't get 200 back.
Okay,
You
thank
just
you.
pick one. If not, make it up. I mean, you're just filling out the form. They want a number. Hey, here you go. Oh, excuse me, my phone's ringing. Yeah, this is Rex. This is the IRS? Well, that's not deductible? Well, since when? We've always deducted it. Well, I can't talk now. Call me back and give me an audit letter, because I think you're a scammer trying to get money out of me without being IRS. Bye. Sorry, we would interrupt.
Very tall.
Okay, so on Schedule C, this is where the business code goes, the NACIS, if you're a sole proprietor, I recommend you get a taxpayer ID number. You get it on the IRS website, we get them for clients. And the reason I suggest you get one is if anybody wants to give you a 1099, they're gonna have you fill out this form, like a W-9 or something. And they want your social security number. Now, you don't have to do it. You give them your federal ID number and they can issue you a 1099 fine and dandy without knowing what your real social security number is.
Right.
Question about that. So what if you're a sole proprietor, you get the EIN number, but you then make a LLC? Is there a way to change put it under
Oh
LLC?
my gosh,
Sorry.
you got a double number. What I would do is just use the one from the LLC.
Oh.
Good enough. More than likely, the LLC is really the income producing entity rather than you personally. Yeah. So there you can have two. You can get, if you have a sole proprietor, you can get an ID number. Your LLC, you're definitely gonna need a federal ID number or you can't open a bank account. And then if you ever try to get another Schedule C federal ID number like I tried to, IRS wouldn't give it to you. You've got one. You can't have another one. Okay, one per customer, yeah.
Could you form a corporation and then an LLC and have the LLC manage your corporation?
Oh my gosh, this is way beyond the scope of this class. Completely off Schedule C. Ask me afterwards and
Okay.
I'll be glad to pontificate for a while. Didn't know the answer to that one. I was gonna have to ask him. Yeah, no, I'll cover it. Okay, so moving right along. Then, in terms of another thing for your business, I teach how to start a business classes too, if you know that. And what I recommend is, a lot of people work out of their home. They would rather not have their home address published on the internet and different things. So go down and rent a UPS store, FedEx store, get a street mailing address, not a United States Postal Service. And then everything for your business, put that address, business location, especially for women, they're worried that the booger man's gonna come around, so they don't want their, home address out, so, it's a good way, it's completely legitimate. The only thing you need to know about those, if you ever move that address, they will never forward mail. It's part of the deal. Okay. What information? We already did this, didn't we? Yeah, I think so. Business address, yeah, we just covered that. Okay, basis of accounting. That means how are you keeping your books? There's two major methods. One is the cash basis accounting. And what that means is when you get money in your hand, that's income. You send an invoice, no income. Makes sense. Most small businesses are cash basis. Oh, and I gotta tell you, I hear it all the time. Oh, I got paid cash, that's not taxable. Wrong, it is. Get over it, don't believe it, it's called tax fraud. So, cash basis when you get cash or pay cash. Then we have another method, the accrual basis of accounting. And all big corporations are accrual basis. So it's a different method. It comes up with actually better snapshot of your company. And the way that works is when you send an invoice, it's income. When you get a bill, it's an expense. And so oftentimes you'll see companies going along, their receivables are building up, and on a cash basis, you don't even see it. Most small businesses are cash basis. I don't recommend the accrual basis. It's a nuisance for small business. Okay, did you materially participate? Several years ago, IRS went on the warpath trying to stop tax shelters because there was a lot of them. And one of the things they came up with was this material participation. And so there's all this criteria about you working in the business, you know, putting your blood, sweat, and tears, and effort, and hours, and so material participation is you actually work in the business. So I've got one client that's got too much money, and he'll just put money in a business. Let somebody else run it. He doesn't even show up. And there's a problem. If he has a loss, he didn't materially participate. So he has no skin in the game. He has money, but in this case, but they're not gonna let him take the loss. And so it's an anti-tax shelter, but it's a question on every Schedule C. So your answer is yes. Okay, next question on Schedule C is, did you start the business during a year? Yes or no? Okay. So what this does, it alerts IRS that there's a tax trap here, and that is, it's called pre-opening expenses. So let's say I'm gonna open a business down at the mall, and I spend 4 months building it out, tenant improvements, and then on November 1, I open for business. Well, everything that I spent before November 1 is called pre-opening. I can't deduct it this year. After November 1, I can start writing things off. So the pre-opening expense is called Section 195 expense. You could take 5,000 of it, but the rest of it you have to amortize over 15 years. So that's the purpose of that question, to catch the new businesses. And whatever, it is what it is. Yes. We've got some excitement then.
In that one where it says deduct up to 5,000 of business startup costs,
Yeah.
right?
Yeah.
Is that where potential candidate unnamed is saying they'll give us 50,000? Is that where we would be able to deduct it? Come on.
How did you multiply it times 10 and then come back with a question?
No, we're being told that somebody, if they become president, they're gonna give us a $50,000 deduction for startup costs for business?
You know,
Is that where this would go?
There's an area of tax that's called hot air and hyperbole. And I can't look up a code section in that section. So I'm sorry, I have no information on that topic. I can't spell it, man. I can't spell it. Yeah.
Well, that's what she's claiming.
I don't know. I can't speak to anything that, I'm talking about the real world.
What's in the book?
Yeah, plus, I don't like talking about politics. I wait till the law's already passed. Then we'll talk about how it works. If it's before it's passed, that's politics. Don't waste my time with it. I'm not gonna charge you for it. Don't ask. When it's done, I'll let you know. Did you make payments that would require you to file a 1099? Oh. Did you pay over 600? Oh, did you pay over $600 to somebody who's an independent contractor? If so, I'm sure you've already got their social security number and you're ready to issue a 1099 NEC for non-employee compensation. So, anybody who's not an employee, has their own business, it's a person, you're looking at accumulating information so you can issue 1099s. And I have noticed that some independent contractors get all irate when you tell them you're going to issue a 1099. I don't know why. The form is like just really small. And that's if you pay an individual. If you pay a corporation, another one that you don't issue 1099s for, say somebody's absolutely in their own business, they have their own location, their own tools, their own licenses. That's not who they're looking for here. It's people that they might classify as employees. Two purposes. One is they found that people that get 1099s tend to have a higher degree of reporting their income. Figure that out. And the other is the 1099s help the government determine who was supposed to be doing payroll tax and who should they audit to zing them for back payroll taxes they didn't withhold in penalties. So, the question was, did you have a payment that you would have to file a 1099? You answer yes or no. And then the question after that is, did you really issue them a 1099? So you answer that one under penalty of intimidation. And either you issued or not. Most of the time I find that people say, no, I didn't pay anything. No, I don't know. Okay, so on the income, gross sales, cost of goods sold, we'll cover that in a second, then net income. If you happen to have separate businesses, you might show the income separate. Sometimes what we'll do on accounting systems is show different types of income. So you can attach a schedule so it shows what the activities are. But we're looking at line 7 for gross income. And then if you have a product business, then you have to go to this section called cost of goods sold. And the way it's a math function, beginning inventory plus purchases less ending inventory equals cost of goods sold. Try it, it works. But most of the businesses I work with are not goods based. They're service based. So you don't see this at all.
What about rentals? I don't see.
Rentals don't go on this schedule. You don't want rentals on this schedule, first of all.
Right.
You want it on schedule E as an echo.
I exactly.
If you have a business that's Airbnb, short-term rental,
Right.
or let's say a bed and breakfast, then it goes under the category of a business and it does go here. But the general rule, if it's real property, don't put it here.
Okay.
You don't, there's a problem with putting it here. Because when we get to the net income, we also have self-employment tax.
Right.
You don't want that on a rental.
No, no.
Okay. So what's ordinary necessary business expense? Well, let's say they had to hire a babysitter so the parent can work. That's necessary. The only problem is it doesn't relate to the business, it's personal. So you can't deduct it. And IRS looks at that. Whether, does it make sense for that kind of business? I mean, you're an LDA and you've got to have a vacation in Palm Springs every 2 months. Well, I don't know how that really relates. So I'd call that personal. And then the other thing with expenses, we go to great lengths to take a common expense and split it in pieces. Split it into the business component and the personal component, which I'll show you. And if you want to know if a business expense qualifies in overall, we have a straight face test. You tell your friend, I'm writing this off. And if you can't say it without laughing, then it's not a business expense. You're just goofing off. Okay, this is your first set of expense categories, and it doesn't matter what you call an expense. If it's directly related to the business and you use the wrong name, it's still deductible. So don't get hung up on the name of the expense. Whether you call it advertising, or you call it promotion, or you call it internet marketing, it's still an expense. Don't sweat the alpha descriptions. Okay, car and truck expense. This one has several pieces to it. So most people drive their car for business. What I suggest you do is take your mileage at the beginning and ending of every year, so you know how many miles you drove. That's critical. Then you need to determine what percentage of your mileage was business. And the answer I get most of the time is, oh. And so there's a way around that. You can take a 3-week time period, track your miles, every mile, every which way, and come up with a detailed sample, and then apply that sample to the whole year. That's acceptable. There's 2 ways to write off the car expense. One is your actual cost, what you paid for gas, oil, repairs, and maintenance. And the other is the standard mileage rate. Now, last year it was standard miles, you got 65.5 cents a mile for the expense. And for 2024, it's 67 cents a mile. So it's a pretty simple computation. You just claim the mileage method, multiply your miles out. I show them on the return to disclose so the IRS can see my computations. Then you claim the expense. But the rub is you can take the higher of your standard mileage or your actual. Whichever is the biggest expense, you have a right to claim. So on the actual operating expenses, I have a chart that we'll go through to break out the business and personal part. And still keep track of your gas expenses, repairs, and maintenance, no matter what method. So this is a chart, it's not a government chart, came from my software. So number of miles driven for business, we determined it was 13,000. And then total miles for the vehicle for the year was 28,000. So now we just divide one into the other, and we got 46% of the vehicle cost is business use. Then that's the mileage method. What's the total expense? Then we go to the actual method, and the way that this method works, it's kind of a spreadsheet where the left column, how much did you pay for gas, how much you pay for repairs, oil, maintenance, insurance, and then you multiply it times your business use percent, 46% in this case, and then you bring the business section off to the right column. And then after you do that, you add up the column, and we've got $5,600 of expense. Fine. Now we're gonna find out what the mileage method did. So on the standard mileage method, it's still our 46% business use. And we had, how many miles? 13,000 times is 65.5 cents a mile. And then you bring the business part over to the right column. And I just realized that number should be smaller over there on the right column, and it's not, so I have to call that a computational error. But let's assume it is correct at 85.15 for argument's sake. So that's the mileage, and then you take the interest on the loan. You can only take the business use percentage, and let's say the total now for the standard mileage deduction was 10,000. So under the actual cost method, it showed 5,600 deductible, and on the per mile it shows 10,200. So we claim the higher of the two. That's what you're supposed to do. This is a picture of the chart in complete format.
Could you write off a parking ticket while you're on business?
Oh, no. That's conduct contrary to public policy.
Stop it.
And it's not considered deductible because they don't want to encourage that behavior. No way. Not even close. Okay, so the next thing we have is lease versus buy. And I'm not going to cover it because I could spend an hour on it, but I want to show you that it's not, oh, it's there, good. It's Edmunds.com calculators, lease versus buy. And so they got a chart on the internet. Say if I buy it, this is what it works out at over a period of years. If I lease it, this is the way it works out. So then you decide. In general, leases cost more. It isn't always the case. And I have a cynical view of it. When you buy a car and you get a loan, they're required to tell you the annual percentage rate on the loan, because that's a loan. Yes, you gotta know how much interest you're paying. And so they make it into a lease. They don't gotta tell you nothing. Nothing at all. Interest rate, what do you mean? It's a lease. And so they really crank up the cost factor in a lease because, my God, it's 49% interest rate, but we're not gonna tell you that. I don't know how that works. So I'm gonna skip that section. The other thing, if you're taking the per mile method, standard mileage rate, you still get depreciation against the vehicle when you sell it. So, for example, in 2023, if you took the standard mileage rate, you get 28 cents a mile considered depreciation on your vehicle. Contract labor. Now, we touched on a little bit. It might be better not to use this category at all because it's kind of sensitized. So put it someplace else in a different name. When you use contract labor, then it alerts the feds in the state that you've got independent contractors and it's a contested issue. And you're supposed to be issuing 1099s. But the real problem, I get, every new business I get in says the same thing. It's like required. Well, we decided that we're just gonna have independent contractors and we're not gonna have payroll. Every business says that. It's wrong. And I'll tell you why. if you hire people as independent contractors, they're not in their own business, they're just working for you. I don't care if you give them a 1099 NEC. The IRS and the Employment Development Department can come in and say, oh, like I had a flooring contractor. They came in and went back 3 years on his independent contractors and assessed him all the employer's payroll tax, all the employees' payroll tax, and penalties for not doing payroll right. It was expensive. So what did he do? 3 years later, he got audited again. He didn't fix it.
Can't fix
You know, that's just what you do. But I advise people against independent contractors unless they are really in fact in their own business. They've got business license, they got business cards, they have their own equipment, they don't use your tools, they don't work in your premises. And the payroll is the best way to go, even though it's expensive. Another reason, compared to independent contractor to employee, if an independent contractor gets injured on your premises, or they can sue you for personal injury. If an employee gets injured on the premises, there's a thing you have to have called workers' comp.
Well, require anyone who works on your property to have their own damn insurance. Nobody works on my properties unless they have their own damn insurance.
Yeah. Yeah, but it's hard when you're running a small business. You're talking about real property.
Yeah, I'm talking about real
Okay,
property.
I'm talking about a small, it's more difficult because a lot of the transactions are smaller. But yes, that's a good idea. But it's still having their own, having their own insurance kinds of, does kind of indicate they're in their own business.
Yeah.
But what I'm trying to get across is just put people on payroll and skip the independent contractor thing. And have workers' comp for them.
Can you, if you do use those kind of services, can you put them under professional services? So like notaries, court runners,
Yeah,
stuff
what,
like that?
on that area, I'm kind of sensitized to what you call stuff. So I don't think I'd use professional, I don't think I'd use contract labor. I'd probably say something like, down in the miscellaneous section, janitorial costs. I'd call it, hauling costs.
Yeah.
See,
Lawn service.
not using the label that they offered you, and you got the right expense total, but gee, it didn't match up something that they can analyze. It's not deceptive, it's called tax planning. There's a difference, right? Yeah. Okay. So, expense for depreciation. What happens when you buy big stuff? You're supposed to depreciate it and move it over to the depreciation schedule. And there, you're supposed to write it off. It's gonna last 5 years, so let's take a fifth of it every year. And big items, that's what you're supposed to do. Then we have a thing called Section 179, which is a code section. And that allows you to write off in the first year 100% of the cost. And it used to be a small number. You know, 25,000, you can't write off more than that in 1 year. Well, for some reason, they raised it up to 1.2 million. So now what you do is, you're supposed to put it on the depreciation schedule. Okay, I'll do that. You put it over the depreciation schedule, then you claim Section 179, you write it all off. And then you bring it back as depreciation. Same result, but you follow the rules. This is a depreciation schedule. There are some limits on personal vehicles that I'm ignoring about maximum deductions, it's a little too tedious. Employment development, or correction, employee pension plans, those are deductible items, I'm not gonna go into great detail. We got, so we covered line 9, we covered line 13, line 20. Okay, so those were subschedules. And, looks like we're gonna be pension and profit sharing, what you paid on those. If you have a pension for employees, like a 401k or something, you have some other reporting requirements that you have to do. And just because you have a Schedule C doesn't mean that's all you have to fill out. There's other stuff that spins off from it. So there's a line 20 for rent and lease payments. I did not use that line for vehicles. Line 20B, other business property, rent, maybe leasing a copier or something. Repairs and maintenance, keep the car's expense in the car schedule. This is for like repairing an air conditioner for your office or something. We go in that section. Supplies is kind of self-explanatory. It means they're going to be usually used up within a year, no carryover value. Tax and license, this is everything other than payroll. You put your $800 single member LLC fee here. Okay. Travel expenses. We used to have a thing called travel and entertainment that we just loved to write off. But it doesn't say entertainment anymore. They made it non-deductible. So now we have travel and meals. So it's travel away from home on business where you couldn't come home and sleep in your own bed because it's too far. Whether it's airplane, other costs, you can write off things as you travel. Some people that travel a lot, they always bring their dry cleaning with them when they travel so they can write it off as they travel. They always have clean clothes. And then we get to meals. And the meals, you only get to write off half the meals from what you paid. I do recommend putting the name of the person that was on the other side of the table as part of your deductions and keep good receipts. And use 6-digit dates on all accounting papers. I had one audit one time, as salesman, he comes into the audit with this stack of meals receipts, all 4-digit dates. What year did that come from? I think he's been accumulating them for 5 years. Okay, then those are actual costs. Then there's per diem rates. And that's from the General Service Administration. They allow government employees to write off certain things maybe without receipts. And the GSA site there, gsa.gov travel plan book, will show you what kinds of things you can write off. Say, this happens to be the meals part, but there's another one for lodging. So as you're traveling around, up to $23 or up to $26 a day for dinner without a receipt. It's just another way. Utilities, that's pretty self-explanatory. We're gonna have to get to the home office, but we have enough time. Wages, expense, put all the other incidental costs for wages in that expense. Now, on the back of Schedule C, there's a thing called other expenses. And this is where you get creative and call it whatever you want to call it. And I do. One thing that I like to do in this section is show percentages, because it shows IRS how fastidious I am. You had a cell phone, and it says I only wrote it off at 80%. Well, then the IRS knows that we've considered that there's no personal expense in that phone. And I think they have a less interest in auditing, because they can see in the return that you consider that kind of stuff. I literally disclose all kinds of stuff in tax returns. This looks like it should be this way, but it's not, because, and then I tell them the way it really works and why it looks weird. Okay. So, we're down at the bottom of the Schedule C. We've got total expenses. Now we have tentative profit. Wow, we're making progress. Lightning speed through the Schedule C, I tell you. Okay, so after we get to tentative profit, we enter the home office zone. So, home office is a contested area in tax. There's two ways to do it: actual and a simplified method. The simplified method is pretty simple. You get $5 per square foot, up to 300 square foot maximum. So that means $1,500 right off. And in order for your home office to qualify, it has to be exclusive use, not mixed use. So if your business is run on your kitchen table and it happens to double as a place where everybody eats dinner, that's not exclusive use. And if you have like an office in a room and there's all kinds of personal stuff in the room too, exercise equipment, you know, different things, that's not exclusive use. So what you do is you clean it all out, you take a picture, shows exclusive, then you put this stuff there. And I a lot of times will draw out, I ask the client to draw out a floor plan. How did you get 450 square feet? So that goes in the record, that floor plan, yeah, that's exclusive use.
I have a question. What about a designated desk, that's your desk that you work?
Yeah, is it in an area where there's mixed use?
Okay.
Is that's the question that you have to answer. So on a desk, I mean, we're talking, what, 5 feet by 4 feet? We got 20 square feet so far. No, what you want is you want a room. You want more square footage. And what you're telling me, or I'm getting, is that it's in an area where there's mixed use. And what you can do, and I've done it this way, is let's say it is mixed use, but you have a certain cordoned off area that's for all your business stuff. And that's all I'm claiming in this area. So you have a justification now.
What if you have a shed or you build a shed?
Then you got more space.
No, but can you use your office as an office?
Oh yeah, you can do that. Yeah, garages work. I'm kidding you. Sure. It's kind of hard to get utilities expense out of that. Electricity, maybe, and I have a separate meter on it. Anyway, so yeah, I would throw it in. And
I have a question.
I have an answer.
Okay. Can you write off both? Can you have an office, storefront office, brick and mortar office, and also maintain a home office?
Okay, so the question is, you got a home office, but you got a real office downtown, and you hide out from your clients at home. No, can't do that. So if, it has to be your principal place of business, if it's the home. And if you have one downtown, some people I hear write that off,
Yeah.
but, that isn't what they intend. So, so what you do is, are you renting that home?
No.
You own it?
Yep.
Oh, okay. So I was saying you're renting, you can give the landlord a smaller check for that part. But, I'm just trying to think. There was a question here.
So what if you have two businesses and you do one in a home office and you do your other business in a regular office?
I think that sounds marvelous.
So I could do the notary
Yeah.
business from home and the LDA business at home.
I guess so, as long as one didn't have a major loss.
What if the property is commercial mix?
Commercial mix.
Zoning.
Well, an office is commercial, so there's no problem there. But you're saying, do I call it a home office?
Correct.
Can you define what commercial mix is?
Zone for commercial mix.
Zone means nothing.
Well, if you prove it to the IRS, it's commercial mix. For example, you know, there's, it can be a grocery store in the front and then a home in the back.
Yeah,
Consider,
no problem at all. You write off the grocery store as office. The home you don't write off.
okay, so then you could write it off.
On the same method is you have to allocate the cost just to get the business component. So unfortunately, we're out of time, but I still don't want to stop. On 8829 is the form for the home office, and if you'll look, it shows 300 square feet business, 2,000 total, or 15%. And before I get cut off and my mic gets turned off during this debate, we go to the next schedule and we show the actual cost. Oh, I gotta keep moving here quick.
Let me just say, has everybody signed in? And, there's still a few NOLO books over on the table. We're asking for a donation. If you wanna give a donation, if you don't, that's fine, but you're welcome to go ahead and take any NOLO books that are there. You
The
can-
donations start at $10, right?
Well, they said $10.
Oh, okay.
They said $10, but.
Yeah, I would think that's where they should start.
That's what it says, and also there's some little flamingos, the lights that we got on
Oh,
the tables
really?
last time.
Oh, man, those things are awesome. I gotta have me a flamingo. Whoa.
And you can keep going as
I'm
long
gonna
as
put
you
it right in my home office.
Anybody
Write
that
it off.
knows that's been in Rex's classes, that they never end on time, and he can go on, so if you wanna stay, you're welcome to stay.
Well, I just have one more point after another. On the home office, this is critical. Okay, so we had that form 8829 to figure out whether we're using the square foot method or the actual cost. Okay, now, what happens is, when you have a home office, you cannot run the business into the ground and have a loss. So the home office has to get clipped if you have a loss and not get a deduction for it. So if you're using the standard method and you run a loss, you just lose the deduction and you don't carry it forward to next year. If you're using the actual cost and it causes a loss, you do carry it forward and claim it next year. So I would have detailed records on the home office. And then I'll cover it really briefly, but when you get, there's a question.
I'm sorry, I have one question on the home office.
Yeah.
Instead of doing all of that, can you charge your business rent and then pay rent, like the business pays rent for that?
Okay, let me show you how that works.
But then you have rental income, right? So does that
You need
like
to schedule it
offset?
in.
Wow.
It's another form.
I'm so confused, I don't know. When you charge yourself rent, it's like taking money out of one pocket and putting it in the other. It's not really rent, okay? And even if you did, you deduct it on one side, put it income on the other, and it ends up being zero. So either way, you don't charge, there's no separate entity. If it was a corp or a multi-member LLC, maybe. It sounds like a shenanigan to me. That's what it just sounds like. Yeah.
Rex, this goes back a little bit, but I wanted to ask you if you've been deducting your mileage on your business vehicle, can you change it to actual expenses on the next year after, or is it better to wait until you get a different car?
Okay, well, I have two answers to that.
Yes.
No is the first one.
Okay.
And that's what the rules say. And then what everybody does. Is what happens is, if you use the mileage method, you're supposed to use it every year from thereafter. What does everybody do? They get amnesia. They don't remember what they did last year. And they change. And I've never seen the IRS raise that as an issue. It's a real issue, but I wouldn't worry about it.
I just give both to my CPA. I know during COVID, of course, we stopped driving that many miles, but I had a ton, for instance, of work done on the cars. So I just reported.
Which car? You have about 7 cars. Man, she's got this Corvette, it's got like all these, and it's a rag top. I mean, she's a hot rod baby for Pasadena.
I'll get there very fast.
Do you have flames? She's not my client. Do you have flames coming out the side?
I have lots of liability.
Wow.
Okay, so lunch is starting at 12.
Wow. Why don't we go to lunch? This has been too much fun.